largely lower, I have to say. Nikkei, which was shut yesterday, is trading in the green. But other than that, it's a 400-point cut on the Hang Seng.
Farm Easy will do a rights issue of around 2,000 to 3,000 crore rupees.
Small caps and mid caps, they continue to see pretty robust action.
850 we have on our balance sheet. Cash is available. Balance, we are still to figure out.
On Thursday morning, though, exchanges will hold a special price discovery session for Reliance Industries.
There you have it, 80 points in the green for the Nifty. The Sensex is up almost 300 points, looking pretty solid.
Building onto those gains, we'll have to see where we end up today, but maybe taking some money off the table at 19,800, maybe not such a bad idea.
I feel much more bullish that way on India right now than I am in US.
I think this is the part of the world that is going to hold up better in the backdrop that we have for global economy.
Well, that's right. Today morning, like we alluded to, earlier, prior to market open, that Amara Raja, we were likely to see a very large block deal along expected lines.
Right now, there has been a sudden pickup in the markets, up 0.5% on the benchmark indices.
Here, it is showcasing how this pilot began from 4 banks across 4 cities and has now been scaled up to 13 banks across 26 cities.
Caps are underperforming with cuts of around 0.4%.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell. It's a Tuesday afternoon. We are coming to you from the CNBC TV18 Motor studios. I am Prashant. With me, my colleagues Reema and Survi. Guys, hi.
Hi. Hi, afternoon.
Reema.
And it's been a sort of a mixed day, right? The frontline indices have moved in this band of 19,800, went down to 19,700, but mid-caps have been sulking through and through.
There is some profit taking, right?
Yeah.
I think it's not just all green. There is some shades of red as well. Not very deep red, but it's there. Market breadth actually flipped if you just pull up the advanced decline. And I think we should just start there because it flipped early on and it remains negative. Some 1,400 stocks are lower, 850 stocks are higher. There you go. Early on in the session that happened and it's not improved since. So that's the broader market. Small cap index actually is down 1%. But small caps have been the best performing asset class. Actually in India, and I think Indian small caps worldwide perhaps will be right in the top of the list if you want to sort of look at subsectors within markets as well. So they've outperformed hugely. They're about 4-5% from their respective all-time high at an index level. And there is a little bit of profit taking, which is their mid-cap index is down about 1/3% as well. Bank Nifty and Nifty are flat. There's not very much to go on there. The Nifty has got supports at about 19,500, which is still some distance away. But the Bank Nifty has broken below, it's trading below its swing high, which swing low, which comes at 45,547. But watch that space. Nifty Bank's known to be pretty volatile. So you want to close below it to kind of project further levels. This was the weaker of the two indices for the bulk of last week before we saw the pullback on Friday and some continuation yesterday as well. Is weakness creeping back here once again? I think that one will need to be watched. So just a few points as we kick off another session. Reema.
Hi, but in the morning there were so many records, right? The Nifty 19,800, the Nifty Bank went on to scale past its previous record levels. The mid-cap index was at a fresh high, and even the small-cap index was at an 18-month high. So it started off with that promise, but through the course of the trading session, as Prashant pointed out, we have seen some profit booking. This divergence in performance in frontline versus mid-cap is very apparent in the IT index. So while the index is holding up, the Nifty IT index, it's the frontline IT stocks which are doing well, led by Infosys, but buying is visible in a Tech Mahindra, in a Wipro, and even the other IT names. Mid-cap IT, which till very recently was outperforming the frontline, the large-cap IT names, both in growth rates and even in terms of the stock price performance, mid-cap IT is struggling in trade. So a Tata Elxsi, LTIMindtree, the numbers were a mild miss, similar to what we had in the case of the other IT numbers. Even TCS, HCL Techs were mild misses. You could have broadly classified and said, well, they're inline numbers. But yet those numbers were rewarded because those stocks didn't outperform. But now when mid-cap IT companies like say Tata Elxsi, right, where they've come, or even an LTIMindtree, which has been an outperformer until recently was not a part of the index, when they came out with mild misses, the street is, punishing them because they have seen that outperformance over the last couple of days. So that's one pocket, the IT. PSU banks are struggling a bit, and consumer names like Britannia, Nestle are pretty much at the day's low, and there is profit booking which is set in them.
I guess today's day is, it's all thanks to a couple of these specific stories. I mean, Infosys, for one, as you're pointing out. There's Reliance, which has been a constant support for the market. A lot of buying ahead of the event that's taking place over there. Then you have some names from the private banking space, thanks to HDFC Bank's numbers. Some of that positivity rubbed off on the likes of an ICICI Bank. So you've got some of those which are, holding the flag high for the Nifty. Otherwise, obviously, we could have had a slightly deeper in the red sort of a session. On the mid-cap screen, I'm just taking a look at where the profit taking is a little more pronounced. So you have some names like an RBL Bank, a Zomato. Some of these stocks have had a decent rally. Zomato, of course, would be a case in point. And that's where some money is coming off the table. J&K Bank. Remember, in the middle of last week, we were talking about, a couple of these sessions where the tier 2 banks were rallying hard. So that's where the money is coming off as we speak. However, having said that, you have some movers and shakers on news and announcements. So Polycap would be one. I mean, we'll talk more about those numbers as we go forward, but the stock's rocking away, about a 5% gain on Polycap as we speak. And the other would be, for instance, a Sheila Foam, where corporate M&A is keeping the market excited. Now they're, of course, going to be merging Kurlon with themselves. It's a large acquisition. They have some pretty solid expansion plans ahead. And the markets liked what they've heard in terms of the way the deal's been structured and, of course, the management's conviction about what they want to do. So that's how it's playing out. Mixed trends on mid-caps. But on Nifty, perhaps you can say not too bad, considering the markets had a great run. Prashant, I mean, I don't think anybody will complain because it's maybe some consolidation today, considering that we've been scaling levels. And it was a pretty good ride once we crossed out 19,500. Maybe just a bit of a pause today.
Absolutely. And pause, a bit of a break, but that's about it at this point in time. Well, how should you position yourself in this last hour of trade? That's what we start with always. Mitesh is with us with exactly that. Mitesh, hi. Good afternoon. On the Nifty or Bank Nifty, if you have a trade, please do tell us. And in terms of specific stocks, what would you trade?
So I think, we had taken some longs on the Bank Nifty when it managed to get past 45,150 yesterday. And there was good momentum. We thought we hit the targets of beyond 4,600 is what I was looking at. It did and reversed from there. But now I think you just trail your stop loss about 4,500 and 285. And that was the low which we got, I think, at 1 o'clock today. And as long as that level holds, you're pretty okay to trade long. Otherwise, you take whatever minor profits you can bank and wait for the next signal to come in. Having said that, the stop calls that I have, a buy on TCS with a stop at about levels of 34.65 for targets of 3,600, and a sell on Jubilant Foods, which I would recommend selling with a stop at about 479 and a target of 450.
Okay, TCS and Jubilant Foods. Those are the stocks on Mitesh's radar. Let's talk about Polycap. They've reported phenomenal numbers. Surbhi joins in with the fine print. Surbhi.
Thanks so much for that. So really good set of numbers from Polycap. It was a beat on all fronts. The revenue was up 42% on a year-on-year basis. Gross margin was expanded nearly 100 basis points. 150 basis points came in at 26.5%. EBITDA was up 76%, and margins came in at 14.1% versus 11.4% same time last year. Now, most of this growth has come from the wires and cable segment, where the revenue is up 47%. Margins are up by 300 basis points, came in at 15%. Revenue from international operations, that has grown 88% in the wires and cable segment. So exports revenue is close to 340 crores for Q1. In the FMEG business, the revenue was up 2%, but it has reported a loss of 5 crores versus a profit of 6 crores same time last year. But sequentially, the losses have narrowed. The management has said that there was weak consumer sentiment that has affected sales in the FMEG segment. Fan segment did see sales from the newer BEE variant, but the lighting business, that has seen a decline due to continued price correction in the LED prices. So which is why FMEG segment is shown muted growth, but cables and wires, that has shown a very strong growth.
Okay, got that, Surabhi. Thank you very much indeed. What a solid top-down show from Polycab. It's just blown past estimates completely. Let's take the conversation forward. We have Mehraboon Irani joining us on the show today. Mehraboon, good afternoon. Always great having you on. I'm not sure if you've had a look at Polycab recently. Please do share your views. And in case not Polycab, is there anything else you would look at when you're looking at the allied space, to real estate?
I would say that the tailwinds in the real estate sector is definitely helping a company like a Polycab or even a company like, say, Havells India. I think as far as Havells goes, divisions like switchgear, cables, light, I think are continuing to doing well because of what we are seeing, the traction in the real estate space. Apart from that, as far as Havells goes, I think looking at Polycab numbers, I'm saying, I think that losses as far as Lloyd's goes, I think that also should be coming down. Commodity inflation is cooling off. So I would say the numbers from Havells also should be interesting. Coming back to Polycab, I have seen the numbers brilliant. And let me admit that whenever I have looked at Polycab, I felt, oh, the valuations are not very compelling to put in money into the stock at the present level. And the stock has consistently proved me wrong. I think at the present level also, if you ask me, if we simply extrapolate the numbers, the EPS for 24 should be over 100 rupees. And at 100 rupees, do you really pay a 41, 42, 100 rupees price for the stock? Second thoughts, you think, why not? Considering the fact that this company has consistently grown. So in terms of performance, I would say I would rank it 100 out of 100. In terms of stock price, I would say that the temptation is definitely high. And I'm not a person who feels left out. If I've not bought at the right price, maybe even at the present price, if I see money to be made, I will go and buy it. And I feel at the present level, looking at the traction in the real estate space, I think good times should continue going ahead for a company like a Polycab or even like a Havells. Between the two, I would prefer Polycab because of more consistency and more visibility in earnings and consistently outperforming the expectations of the analyst community. So I would put a clear thumbs up to Polycab.
Great company, according to you, but expensive valuations. The stock is currently at 42 times FY24 PE and 35 times FY25 PE. And in the last 1 year, the stock has gone up 90%. ICICI Pru also reported their numbers around 1:30. Surabhi joins in with the numbers and the fine print. Surabhi.
So the numbers for ICICI Pru were pretty much in line with the estimates. It was slightly weaker on the margin front. The value of new business was down 7% on a year-on-year basis, came in at 438 crores, but our poll suggested 435 crores, so bang in line with the poll. The VNB margin came in at 30% versus 31% same time last year and versus 32% our poll. APE saw a decline of 4% on a year-on-year basis, but when you see the protection APE was up 4%, so the decline has come from the savings and the annuity part of the business, where they've seen a decline of nearly 6 to 7%. But in their June numbers, monthly numbers, the retail APE saw growth of 12%, which was the highest that they have seen in the last 12 months. So it's still positive for ICICI Pru, and we'll await for more commentary on their con call today at 4.
Okay, got that. That's the take on ICICI Pru. So maybe more of a mixed performance in the fourth quarter. Thanks, Surabhi, for that. Mehraboon, life insurance, what a phenomenal ride, right? Especially stocks like HDFC Life. But what's your take? And if you were to buy an insurer, which stock would you go for?
Well, a difficult choice if you ask me. I think I've given a one-line answer to insurance stocks was that they are compounders. Don't expect overnight returns, but they are stocks which will possibly keep on growing. Some announcements here and there may keep on coming, affecting the taxation part and all. The stock may get hit, but at the end of it all, looking at the overall business opportunity, I think the stocks have only one way to go and go up. But if you're expecting overnight returns of 5, 10, 15, 20%, which quite a few people are getting used to in quite a few mid-caps and small-cap stocks, this is not the segment you should be in. So this is a sector which I feel that one can just go and believe that my returns will get compounded over a period of time and keep it as a part of your core portfolio. And in this, honestly, it would be very difficult choice, whether I go with an SBI Life, which looks the most attractive in terms of valuation, or should I go with something which is the best brand, possibly expensive, but I still want to have it as HDFC. So difficult choice over here, honestly. One of the insurance stocks should be in an investor's portfolio if he believes in having a part of a portfolio which can call it as a core holding.
Okay, Meribun, hi, afternoon. Just coming back to you, stay with us. It's all cables and wires today, right? I mean, we were talking about Polycab. Take a look at Havells. The last I checked, it was up. Okay, it's come off a little bit from the day's high, but it still has about just under 3%, 2.75% gain. The high was 1372, so it's about 40 rupees off the high. UBS, I think, has upgraded the stock, and Nimesh has been telling us more about it. Nimesh, take it away.
Hi, Prashant. So, rightly pointed out, Havells is buzzing in trade. We saw what happened to Polycab after the numbers as well. An interesting upgrade from UBS today on Havells. So, they've upgraded the stock to buy from neutral, and they've raised the target price sharply to 1900 from their earlier target price of 1360. Now, they believe that the structural growth story for Havells is back into consideration along with the cyclical kickers as well. So, on numbers per se, UBS believes that Havells will move up the growth and profitability curve with sustained revenue share gains and a bit of recovery in the and turnaround in the Lloyd business as well. Now, on back of this, they've raised the FY26 and FY27 earnings by 9 to 10%, and they believe that Havells' addressable market, which is currently around $20 billion, $25 billion, that can go up to $40 billion by 2028. So, on back of rising addressable market and a turnaround in Lloyd, today UBS has upgraded the stock to buy now, and they've raised the target price to 1900. Remember, the results of Havells are scheduled for 28th, which is this week, and the street is anticipating weak numbers. So, any surprise could be, numbers would be interesting to watch out, but an interesting upgrade today from UBS on Havells.
Okay, Nimesh, thanks very much for that. Meribun, not Havells, but I wanted to ask you about Angel One, the broking company. It fell yesterday. It's down, I think, about 7-8% today. It's done very well. I think after the give back last 2 days, it is up some 40% in the last 2 months or so. It was almost 50% before the correction, maybe more. What do you make of it? It's not, on current estimates, it's not an expensive stock. It trades at about 14-15 times F524 earnings in a market where 14-15 times is kind of hard to find. And it's a capital market play. Presumably the market stays strong and the business is doing well. There was a setback with the onboarding of new authorized partners. But beyond that, how would you look at this one, Meribun?
Honestly, I've not seen Angel One I've not seen it closely, but I would like to add to something which you mentioned about the valuation. Prashant, the point is that are you confident that the market will go up higher or will it come off? Let's understand one thing, the market is always ahead of us in valuing stocks, especially stocks in sectors which are going to be in favor. So a 14-15 P can become a 16, 17, 18 also. The market has to go higher, but if the market has to come off, well, a 14-15 P for a stock which is directly related to the capital market, should I pay for that or should I not pay for that is a question which I'm sure that every investor who is worthy of knowing where he is putting in his money is going to ask this question. So Angel One as a company, I've got a lot of respect for it. Whether to say that the stock is cheap or not, I think it's not fair on my part to comment because I've not looked at the company very closely.
Okay, fair enough. Meribun, stay on. We'll have some more questions for you. We'll take a break. As we take a break, by the way, look at the gain on Infosys, 3.5% higher. The market has really taken note of their announcement that they've got a $2 billion deal that they've signed for the next 5 years. And it seems that is one thing apart from the fact that just general enthusiasm around large cap IT, which seems to be helping the stock. Nifty winner today, 3.5% playing its part to keep the index afloat, by the way, which is up now just about 24 odd points. We will take a quick break. On the other side, we get chatting with the N. Jaykumar of Prime Securities. So do come back for that.
Welcome back. On the verge of dipping into the red now for the benchmark indices. The Nifty is holding out with a sliver of a gain, up just about 8 points up. The Sensex, though, is up close to about 0.25%. One stock which is under pressure today is Amara Raja. Earlier today, there was a very large block deal of nearly 16% equity which changed hands. And what we've learned from our sources is that a very large investor, Clarios, ARBL, has completely exited in today's transaction. They've been long-term holders in Amara Raja. I think even 2 years back, in May of 2021, the Clarios had sold some stake, 10% stake in Amara Raja. They had a 14% or 16% stake, and now that's been sold too. Mehrbun is still with us. Mehrbun, any thoughts on this transaction? What if Clarios indeed has exited? What does it mean for Amara Raja?
First of all, let me state that what we are seeing as far as this battery manufacturers and their stocks goes is, I would use the word more of optimism and less of reality. I think the fact remains that Amara Raja Batteries is definitely the second largest lead battery manufacturer. Technology upgradation is happening into the lithium battery, and work is progressing well, no doubt about it. The market somewhere has extrapolated all the expectations somewhere in the valuation of the stock. Now, let's not forget, ultimately, battery manufacturers are nothing else but semi-industrial companies, where ultimately the commodity prices can possibly affect your stock prices at the end of it all. So, Amara Raja, a company which I think should report an earnings of around 48-50 rupees or maybe a 55 rupees going into FY25. I would never believe that this type of companies can command a valuation of more than 13 to 14 times. So at the present level, I feel, despite the fact that all that is getting played out as far as EV segment goes and lithium goes, lithium-ion batteries goes, I think even if that gets played out, with this earnings coming into play of maybe 50 rupees or 49 rupees in FY24 and 55 rupees next year, a 13 PE should not give me a stock price of more than 650 and stretching yourself maybe 700, 720. So with a 10-15% upside from here, if I was a big investor, well, even I would possibly consider lightening my portfolio. So nothing negative about the company, nothing negative about the industry. It's just a question of valuations, and at the present level, I don't see more than 8 to 10% upside coming for the stock going ahead over the next 6 to 9 months.
Mehrbun, thank you very much for that. Appreciate it. I just want to quickly highlight what's happening with Godrej Agrovet. Rima, take a look at that. I mean, you know, there was a news flow. They got allotted some land for new factory or new facility.
47,000 acre land in Telangana for oil palm cultivation. That's the news.
Wow. I think it must be linked to the government's sort of program to promote kind of reduce dependency on import of palm oil and sort of help companies here. But massive move. I mean, actually, it's come off the day's high. It's like a rocket starting 235 when the news hit. The day's high, by the way, is about 522. And it's now at about a little over 500 odd rupees or so. So that is Godrej Agrovet. Seemed like a pretty large announcement. We'll try and have the company over to talk to us about this. But the big Infosys deal, Rima, the market likes it.
Yes. So the company announced that they've entered into a framework agreement. Now, it's a framework agreement, by which we mean that the deal value is estimated by the company. It's not something which has been signed off by the customer on a dotted line. So the company has entered into a framework agreement with one of its existing strategic clients. Here, the wording is very important. One word that we caught on is framework, which means it's an estimate by a client about the overall value of the deal. The other one is that it's an existing strategic client. When you mean strategic, it would necessarily mean a biggish client for the company with existing revenues. The deal value is $2 billion, which is spread over 5 years, which means annually $400 million. The company has also said that the total client target spend over 5 years will be $2 billion. Now, the question is how much of it is new. If it is an existing strategic client, they would be contributing something to the company's top line. So if earlier maybe they were contributing, say, $1 billion, now the total contribution will be $2 billion. But what is the existing contribution? What is the net new? That is something we don't have, clarity about. But what the street likes is that nonetheless, $2 billion is a mega deal for the company. And remember, if the company needs to get to its aspirational, achieve its target guidance, revenue guidance of 4 to 7%, if it needs to get closer to the upper end of the guidance, then it needs to get these mega deals. So this is still a mega deal. The question is how much of it will be incremental net new, and the stock has seen some buying. Today it's up 3.5%, but since TCS reported numbers, and pull up a 1-week chart, TCS reported numbers on 12th. Since then, in the span of 4 trading sessions, the stock has gained close to about 10%. So this is some serious buying ahead of numbers on Thursday.
And these are not small stocks by any measure. Very, very interesting market reaction in the face of what seems to be pretty dull commentary, with no company giving you an exit date by when, the sluggishness will kind of wrap up, and when no one's saying that we are expecting a clear pickup in the third quarter. No one's saying that, but I think the market's just, making sort of a mind of its own on this.
And I kind of agree with it, right? I mean, this wait for this US recession. At some point, recession will happen. It'll hit companies. And that was a valid expectation. But I mean, there's no recession. It's a pretty, the economy is doing well, it's humming along. So maybe it'll happen, but how do you time it, right? I mean, so I think it's because that is also the only large, I mean, at least the large caps in the IT sector are the only one pocket where there is, I think, some valuation.
At least there's some but the companies have also kind of, they've been admitting this, that there is a delay in decision making. There are deferrals. But I think the market's just saying, we're not going to wait, let the delays happen. We need the stocks in the portfolio now.
But every single company's refused to call out a recovery.
Exactly.
Every single company we've spoken to, they're saying there's just so much uncertainty. You don't know when the clients will start spending right now. There's absolutely no clarity.
Maybe they're learning from the good old trick of Mr. Murthy, right? Under-deliver and...
Under-promise and over-deliver.
Sorry, I mixed it up. All right, well, Mr. N. Jayakumar is with us, Managing Director and Chief Executive Officer at Prime Securities. Jake, it's great to have you with us here. Good afternoon. Thanks for joining us. A tinge of caution needs to be inserted into the conversation, into the commentary out there, according to you, Jakes, or you think it's going well and will continue to go well?
More than a tinge of caution. I think there's significant froth that's built up in the small cap end of the market. I think IPOs also are beginning to quote at pretty ludicrous, valuations post their listing. So my own feeling is both the IPO market to a lesser extent, but definitely the small cap market is littered with a lot of froth. The mid cap market possibly not as much, and certainly if there is comfort, it's probably only in the frontliners where you're hoping for certain sectoral pickups to actually buttress the Nifty. But inevitably, if you see the overall sentiment in the market, there is a global sort of consensus building up of an India must be a market to invest in kind of consensus. It's true for Indian, should I say, retail and HNI population, which so far has been cautious, but in the last week, 10 days, I've seen them, I think, being afflicted by FOMO, wanting to come into the markets and be in some end of the market, if you will. So there's a lot of, should I say, unconvinced, but must be in the market kind of buying that's going on. I think the market is definitely heating up. Because of global consensus, so much money coming in, maybe we are heading for, and I think there could be a sort of a small parabolic kind of rise if this is not already seen as a sharp one, before the market settles to actually start correcting. I think, this entire thing about bad results, good results, not affecting price moves, may be about to end. There will be decided, movements in market, in stocks post results, which has so far not happened, because I think there's a flood of money that's coming in from overseas investors who've been left out, those who played China, those who played going back to the US, and now feel that the Indian market hasn't corrected, therefore need to come back here. So I think this last leg is seeing a lot of money that on its own either chose to go out and therefore is coming back. A bit of a capitulation, sort of short capitulation move. Maybe we haven't seen the absolute, fag end of it. Maybe we are 500-700 points on the Nifty away. But certainly I think the markets will be well served by a correction. Valuations are getting rich. But there are pockets, and in all markets, there'll be pockets where you'll go to. And I think the large caps are giving a lot more comfort there than the smaller mid caps.
Jakes, hi, good afternoon. Exactly on that point. So I just wanted to ask you precisely this, that how do you sort of keep your sanity against this wall of money that's hitting? Because it could keep coming in, right? Because of the China factor that you mentioned as well. So look at spaces like defense or electronics, you know, the EMS guys. These stocks are quoting at 40, 50, 60 times forward earnings. So which are the pockets? Are these the pockets, or is there some other space where you would advise either profit booking, straightaway profit booking, or at least a complete halt in entry, irrespective of the long-term potential? Do you see such sort of spaces or pockets in the market?
Even in unbridled bull markets, there are corrections which can be short and sharp. The defense space clearly is as frothy as you can get. You know, every order, every execution, every technology agreement, if you will, over the next few years has been factored in. My own sense is markets don't move like this. It's because these spaces did not have allocation earlier that you have money walking in the way it is. There's a lot of HNI money that's walking into these spaces, and 50, 60, 70 seem to be par for the course. I'm still, in that sense, an old school guy who believes that anything beyond double-digit, mid-teen kind of P's needs a second, third, fourth, maybe a 15th look as well. And therefore will inevitably miss out on some of these extremely rich and frothy sectors. Not a problem. I think whenever there's a sectoral pickup, like chemicals a while ago, defense today, those who got in initially, either by design or by default, end up making the most amount of money. And if it's a 3-year run, 80% of the gains come in the first 6 months. And after that, really, you're desperately clutching at straws to justify valuations. Are these sort of structural bull markets in these spaces? Difficult to say. In chemicals, for instance, there has been sharp pullbacks, and now people are picking up individual spaces to get into. Wherever there has been a factor like because of China or because of certain duty concessions or because of certain reasons that some sectors have flourished, and if that is a transient reason like solar, for instance, where the US now suddenly over the last 2 years put a halt on all kinds of Chinese imports. The biggest beneficiaries were Indians or the Indian companies. And now, while Indian companies are seeing order books swell, you have the US government giving adequate and more shops for manufacturing to be set up in the US. The moment these manufacturing capacities come up, again, you could have the same problem where initially it was China, now it could be the US, because the manufacturing and the software are far richer than what's available in India. So we have to be careful where there is a sectoral play which could be a short period of time. There's an interesting phrase which markets mention, or certain section, which is called profitable death. Profitable death refers to something like, when there's a mad scramble for, let's say, ESG. People say that we must absolutely junk coal and other kinds of, black assets, if you will. With the result, some of the coal assets started getting sold off at 1 time EBITDA or 2 times EBITDA, which means that if you look at the business metrics, if you bought this, 1 year's cash flow could justify your purchase. So these are called profitable death kind of scenarios where these are hugely profitable for 1 to maybe 2.5 years, and then at the end it's like a cliff, the profitability just falls off. So I think we've got to be careful that a lot of spaces in the market are developing these kind of characteristics. And technology, especially with AI coming in, is continuing to be a huge disruptor of businesses. So I think as a longer term investor or investor for long, if grey hairs is the only way to explain my being around for long, I think I'd be very happy going back to businesses that have seen cycles, businesses that are adapting, whether slowly or otherwise, and go back to picking stocks which I still think have value. They are valued much less in my portfolio, the kind of stocks that I have. And I'd like to,
Jakes, if I could, sorry, Jakes, just to come in over there, if I could just ask you that, is this the same argument or the same reason that's pushing IT stocks higher? Is it just the fact that there's so much liquidity coming in? Or Or do you see IT differently, that perhaps valuations are much better and, there's no need to write off these companies, given the extent of demand that's perhaps just been delayed and not postponed indefinitely?
Well, IT is a particular case where there is no debt on balance sheets. These are liquid balance sheets, profitable companies. Maybe growth has come under a bit of a cloud. I think IT has another factor, which is we haven't still seen the impact of AI on services. And my own assessment is that the AI impact could be much, much more pronounced than we've seen so far. What you've seen right now is just some deferral of spending, and some of the growth rates have gone down to middling single digits or low single digits. So IT may be suffering from that perspective, that you haven't seen too many sectors which have this level of cash, this level of dominance, and yet because growth comes down, they're down to multi-year lows in terms of multiples. So IT I would view differently from other businesses that flourish only because of certain, let's say, concessions that are given. And I keep giving solar as an example for that. There aren't too many listed plays in this. And the other thing would be things like coal, etc., where the movement out of traditional fossil fuels has meant that people have just, kitchen sunk, if you will, the entire portfolios. You had people like BHP Billiton listing their coal assets at 1.5 times and sacking it out, only because they wanted to be seen as ESG compliant. And, people made a lot of money in that. So there are ways to make money, but I think we need to be cautious that markets are definitely richly valued. So, you will obviously not naturally ask me if I'm recommending getting out of the markets. In fact, not really, because I think spaces like pharmaceuticals could be a big sectoral shift. We're seeing this. People have been underinvested in, again, a space like IT, which is export-driven in many senses. It's got a lot of cash, very low on debt. It had problems recently about FDA approvals. It had problems on pricing in the generic space. Some or all of these have been correcting. Approvals have been coming much faster. Indian companies have learned to become more compliant. Pricing pressures have dramatically eased. And suddenly generics is in big-time demand both in Europe and in the US markets. So my feeling is that pharmaceuticals gives you the comfort of valuations. It's got the local PLI flavor as well thrown in one or two cases. It's got biosimilars. Many of these, certain brokerages, including us, not brokerages, certain research houses believe that biosimilars could be the big differentiator going forward. And there are companies with portfolios that are biosimilar stacked. So I think we need to be a little more deep diving in our research approach. This is not going to be pick up darts and throw it and you make money. I think that those days are actually pretty much, to my mind, behind us. And therefore, I urge caution on that front. I think with the capex and the capital goods bullishness that we are seeing in terms of orders, I think metals very inexpensively valued. So these will not give you the kind of returns that new age economies or new age companies make. But I think these are solid returns in the market, which some of these well-integrated metals companies scored. As I talked about pharmaceuticals, I've talked about companies. And if India has to grow the way we're all seeing this, financials, they have to be at the cornerstone of growth. So whether it's PSU banks or it's some of the smaller private sector banks, I think there's a lot of opportunity in the markets, but we need to be clear that we approach this with a clearer head than has been made possible in recent times, where people are now calling up and telling you of their successes in the market. And when people start recounting successes, I get a little worried.
All right, Jaykumar, well put together and good to hear that. Thanks very much, Jaykumar, for joining us and running us through what you're making of things at this point in time. Well, we're up, 40 points, 19,750. And so it's a bit of back and forth. It's not one way, not up, not down, but a more flattish kind of day so far. We'll take a quick commercial break here. As always, we'll get you what's happening in dealing rooms. Nimesh gets us the stocks to watch and, of course, the chatter. Our trade calls, short-term trading ideas with our technical experts after that are lined up as well. Stay with us.
Welcome back here with us on Closing Bell, and let's straight away get into our special segment, the Street Chatter. We have Nimesh joining in as always with all the insights. Nimesh, so it's been a more range-bound day, some profit-taking coming in as well. What have you picked up from the dealing rooms today?
Well, absolutely, it's quite range-bound and choppy as well, right? The Nifty has been trading in that 50-70 point range throughout the morning session, despite the fact that some of the large caps have been supportive. Reliance is doing good today. There are buy flows in HDFC Bank as well, though it's not showing in the numbers, so to speak. The flows are mixed, but with a positive bias. That trend of FI buying continues. But do remember, today's FI number, the institutional data will get impacted because of the Amara Raja large block. So that needs to account into. The sector which clearly stands out is technology. For the third day running, most of the technology names are well bid by the large institutions. And for that matter, I say Infosys is up over 3.5% in today's trade as well. And in general, the technology stocks are well bid, so that's overall feedback. I guess from a broader market point of view, some bit of profit booking is clearly visible, but within that, the PSU banks are under pressure. Remember, we saw a big move in yesterday's trade, and some bit of reversal is happening within the PSU bank stocks today. But net, choppy day of trade, but I guess the momentum for the bulls continue, and technology is leading the pack.
What about stocks? What do you have on your radar, Nimesh?
Well, in terms of individual names, remember the first stock is Marksans Pharma. Interesting name, this has come to my list for the very first time. So even at these levels, there is a bit of institutional buying coming in, and the delivery volumes have been quite high for the last many days, and that's going to be the case today as well. So that's the first stock. Second stock is Power Grid. Been consolidating in a very narrow range of late. I believe there is a small sell flow at a leading FI today, but looks like a long only fund is likely selling out, and the last lot could happen very soon. So Power Grid should be in focus for that reason. And the last stock is Amara Raja. I spoke about large block, which will have an impact on the flows as well. We all know the seller, which is a Prism Johnson company, which sold out. But in terms of buyers, I believe some domestic large funds were buyers in today's block. So the disclosures could be important. I understand there was a slippage as well, but some domestic funds have bought in Amara Raja in today's block deal.
Okay, got that. Thanks very much, Nimesh, for all of the details and all the stock action as well that you're picking up as usual. We have Mitesh back with us. Mitesh, so let's get some final advice in. The Nifty continues to be fairly ranged. So index, any final words, and of course, any of the stocks you're looking at now?
The index, as I said, I think, the Nifty, we don't have positions. The Bank Nifty, as long as we are above this 45,250 odd levels, 280 odd levels, we're pretty okay to hang on to our long positions. It's not very far away, but I think that's the trading stop loss which you've got. And on the stock side, Alchem Labs is a BTST with a stop at about 36.45 and a target of 3,700 for tomorrow. And on the selling side is ICICI Pru Life, after a good rally, is seeing some correction, some profit booking. So take a STBD traded very tight stop at 580 for targets of 566.
By the way, I think, Mitesh, we discussed this in the morning. Anything new on Angel, or is down more at the day's low?
Yeah, Prashant, we actually talked about 1450 as one target, and then if that breaks, and there's a chance of that happening, because this candlestick is a very negative candlestick, very big bar today. So I think the 200 average around 1360 could be tested. I think that's the eventual target which the stock is in.
Okay, all right, Mitesh, thanks very much for that and for your trading ideas as well. Now, Federal Bank is in focus, not because the stock moved, but for the buzz around the bank's plan to raise funds soon. Abhishek is here with more details on that. Abhishek, take it away.
Well, Prashant, Federal Bank is in fundraising mode. They may look to raise about 3,000 to 4,000 crore via QIP soon. We had reported on 29th May that, as per sources, they were looking to launch QIP. One alert is that the company has a board approval to raise up to 4,000 crore. Another alert is that we had written to the bank. However, we are still awaiting the response from them. FedFina is also planning an IPO. The company has informed the stock exchanges. FedFina will have, the option of OFS or offer for sale. To alert our viewers, Federal Bank holds about 73% stake in FedFina. And last time, the bank did a QIP, it was close to around 117 rupees per share, which was about 4 years back. So stock has gained about, around 14-15% in last 4 years. So what the money can spell, if at all they completely raise 4,000 crores via equity and taking into account current market price, to your Tier 1 ratio can increase by about 367 basis points to about 16.2%. Book value can increase by 3.2% to around 109 per share. Net worth will increase by close to 18%, and equity dilution would be around 14.2%. Back to you.
Okay, all right. Thanks very much for that. Keep an eye out on that one. Lots of triggers around this fundraise lined up here. You know, look at Polycab. I just want to kind of just leave you as we take that break with that name. It's at the day's highest point once again, and it's up almost 6%. And I think almost 4.5%, 5%. Bulk of the gains have come in after the numbers actually came through. So that's a solid, I think 150 rupee move on the stock post the results which have beaten expectations. The numbers are super strong. We have the management coming up in the morning tomorrow to better understand what happened in the outlook going forward. We'll take a quick commercial break here. Jay Bala of Cash the Chaos will be joining us on the other side. Stay tuned.
Welcome back. Jay Bala of cashthechaos.com is now with us on the show. Jay, it's quite staggering, the rally that we've seen. In 1 month, the Nifty has gone up 5%. We were at levels exactly at 18,750, and now we're at 19,750, all in 1 month. So it's rising on very high valuations, very high levels, this kind of a swift up move. Where are we headed from here on the Nifty and even the Nifty Bank, since that's the critical element?
Yeah, thanks, Rima. Thanks for having me on the show. And Nifty Bank is the more critical one at this point, and we've been projecting for quite some time why I don't believe that this rally is not a multi-year bull market, but is only a short-term bullish potential. I've been projecting that when the market broke above 18,459 on the 26th of May. And, the reason for that, we've seen charts for the Bank Nifty, and, that's the reason why we've seen underperformance of the Nifty Bank today. And it hasn't got much room, but it's still trending up. It hasn't come below critical levels. So assume the trend is still going up. The Nifty's potential, as I projected in around the end of May, is about 20,500. But the 20,500 may not come directly, even though we are pretty close to it. What happens in the intraday moves from here on is going to be very significant. As long as the Nifty can hold 19,517 to 19,467, it's still trending up. But if it were to trade within that zone, then we are looking at a short-term correction, maybe something larger. We'll work that out once the market enters those levels. But right now, it's still trending up and pushing towards 19,900 and possibly 2,500 from a couple of months perspective.
19,900 and 2,500 Nifty. Couple of months, Jay? Just getting the numbers right again?
That's right. That's right.
Okay. All right. That's a bullish view until that thesis is challenged. So let's stay with bull calls then. Any specific stocks where you're seeing some very promising formations, chart formations, or any sectors? If one is going to play this Nifty to 25,000 sort of a move, then what stocks to look at?
I seriously doubt 25,000 is going to come through me. So that's the reason why I've not been outright bullish. No, it's just short-term bullish. But the sectors that I'm bullish on at the moment, and I've listed a few stocks several weeks ago, and amongst them, I was bullish on midcap IT from October of last year. There is a trade coming up in the same stock. I was bullish on Persistent at about 3,500 for record highs. The record highs have come through. Now there is a short-term trading opportunity. Persistent is probably likely to hit 5,600 as long as 46.40 is predicted. So that should be the stop. And the interesting play is coming from the capital goods name, GE Power India Limited. That's an interesting one because it seems to be bottoming out for the down move it saw from 2018. So if the stock can hold above 124, I think it's headed probably doubling from here. But even though the upside potential is attractive, the allocation has to be sensible here. It's a mid-cap laggard within the capital goods name. So that's the reason why it's interesting here. The stop below 124 is essential. It's quite wide, but stagger it in a sensible manner. The other one is the stock from the media space, Saregama. It's got a very interesting setup, an unfinished move from 2008, and this looks like a short-term bump up that's likely to complete the long-term view from 2008-2009. So potential for fresh record highs past 550, maybe even 700 if the stock were to move as anticipated.
I get that. Very briefly, Jay, globally as well, things have turned around, right? In a very nice way. Dollar is down massively. Yields are down. How's that shaping up?
No, it is interesting that the dollar has come through, and it's important that it has come through. There were a lot of cross assets that were out of sync because of the dollar, and this drop below 100.7 that we had been anticipating for a few weeks now. That has satisfied the dollar structure. So I think a lot of people are going to be surprised, and I expect the dollar to hold around 98, and then it will be a massive reversal. But we don't preempt the markets. Let it happen. Once that reversal happens, we'll deliberate on that, and I'm anticipating the dollar to surprise for the rest of the year. But at the moment, it's still trending down, and we still got one more sequence of lower low pending for the dollar.
Okay, all right. Jay, thanks very much. Great speaking with you. Appreciate you joining in with that perspective. That's a closing bell, by the way. We are going to end with a 40-point gain, which is, I think, around, let's just see what the opening today was. Maybe The open today was at 19,787. It's not very far away, 20 points away from where we opened. The high was 19,820 and low was 19,690. It's a big, not a very large candle, but we kind of went somewhere in the middle of the range. Nifty Bank, a little more, not trouble, but it was down, just marginally down. The small cap index pulled back a little bit more, and the mid cap index was down as well. Small cap index down just under 1%, and the Nifty mid cap index down just flat actually, 0.1%. Market breadth as a result was in the red. Again, that also, the gap was pretty wide, but by close now, just 300 stocks separate advances and losers in favor of losers after many days in a row. Prima.
All in all, a mixed, quiet kind of a trading session. IT surged yet again, led by Infosys, top Nifty gainer, 3.7% up. Gains continued in HCL Tech and Tech Mahindra and Wipro. Asian Paints was the second biggest Nifty gainer as crude prices continued to decline. Asian Paints is up 1.5%. Reliance Industries contributing on the way up. ICICI Bank, Hero MotoCorp also seeing green on the screen. On the losing side, HDFC Life was subdued in trade, 1.5% lower. State Bank of India, Britannia, Titan, Bajaj Finserv. These were some of the stocks where the losses were in excess of 1%.
Okay, on the mid-caps, a slightly quieter session. The index is ending with a cut of about 35 points. In terms of some movers and shakers, Delta Corp managed to find some buyers, 4% up after the drubbing earlier this month.